The market does not just move, it speaks. And today, the tape is screaming rotation. While the surface level indices look like a bloodbath to the casual observer, our institutional scanners are picking up a much more sophisticated migration of capital. We are witnessing a massive programmatic flush in semiconductors, but the core AI narrative is not dying, it is evolving. Welcome to the deep dive breakdown of the great AI infrastructure rotation. Let us begin with the macro reality. We are currently operating in a heavy risk-off environment. The world indices are under intense pressure across the board. The S&P 500 dropped 92.74 points, representing a 1.24% slide to close at 7,408.50. The Dow Jones Industrial Average was not spared, sliding 537.33 points or 1.07%, while the tech-heavy Nasdaq Composite plunged a staggering 410.05 points, which is a 1.54% haircut. The untrained eye, this looks like a simple broad sell-off. However, look at the NYSE Composite, which fell 1.31%, and the Russell 2000, which fell 2.41%. The fact that small caps were punished nearly twice as hard as the blue chips tell us exactly what is happening. This is a programmatic index flushout. Algorithms are hitting the sell button on high beta and small cap assets to de-risk as quickly as possible. Now let us pivot to the heart of the carnage, semiconductors. Our institutional scanner flagged a systemic bloodbath in this sector. The semiconductor ETF, ticker SMH, is the smoking gun today, sporting a final score of 67.08. You might ask why the score is so high on a down day. It is because the technical damage is perfectly coordinated. SMH carries an ATR score of 9.76 and a volatility score of 2.32. Most importantly, it triggered a break score of 20 and a multi-score of 15. This confirms that this was not just standard selling. It was an algorithmic block selling event triggered by a massive opening gap. Look at the individual casualties. ARM fell 8.46% with an ATR score of 9.52. Micron, ticker MU, flushed 6.62%. ASML dropped 5.22% with a volatility heavy ATR score of 10.08. And even the industry leader NVDA slid 4.42% on a massive ATR score of 10.16. When you see a universal break score of 20 and a multi-score of 15 across these tickers, you are not looking at bad company news. You are looking at institutional machines liquidating an entire sector in unison. Amidst all of this wreckage, one titan stood defiant, Microsoft, ticker MSFT. This is our ultimate counter trend leader today, boasting a dominant final score of 71.74. While the rest of the tech world was being sold off, Microsoft surged 3.05%, adding $12.49 to close at $421.92. The data tells the clear story of institutional safe haven seeking. Microsoft printed a crushing surge score of 45, a volatility score of 3.02, and an ATR score of 8.72. Its volume was a massive 50.771 million shares, which is 1.51 times its 3-month average of 34.355 million. The institutional narrative here is profound. Smart money did not abandon AI today. Instead, they rotated out of the expensive hardware like the chips and sought refuge in foundational software infrastructure like Microsoft. Contrast this with Apple, which barely scraped by at 0.68%, or Palantir, which was flat at 0.19%. Microsoft was the true alpha destination for institutional capital today. We are seeing the exact same pattern of leverage flashing in the crypto equity space. If we look at the most active stocks list, Coinbase, ticker COIN, collapsed 7.82% with their final score of 51.66 and a break score of 20. Marathon Digital, ticker MARA, fell 6.4%, also triggering a break score of 20. But here is the critical catch. Spot Bitcoin only fell 2.13% to $76,714. Ethereum dipped 3.57% to $2,113.07. This is a vital lesson for every trader. Public equities like Coin and MARA act as high beta volatility amplifiers. When the market goes risk off, the over-leveraged paper hands in the stock market get liquidated long before the underlying spot crypto assets feel the real pain. So where else did the money go? When capital leaves chips and crypto proxies, it often finds home in the grid. Natural gas futures surged 3.31%, carrying a surge score of 45 and a final score of 51.58. But the real shocker was in clean energy. Looking at the top gainers list, SolarEdge, ticker SEDG, skyrocketed an incredible 22.93%, jumping $11.52 to close at $61.76. It did this on 14.48 million shares, which is nearly 4 times its average volume. NVDA Energy, ticker ENPH, followed suit, jumping 10.16% to $52.81 on over 20 million shares. How does this connect back to AI? It is very simple. AI data centers require an astronomical, almost unfathomable amount of power. Institutional capital is flowing directly into the grid and power alternatives because they realize you cannot have the AI software revolution without the electricity to run the servers. Today was a master class in structural institutional rotation. We saw a coordinated exit from semiconductors and crypto leverage, a massive bid for Microsoft's software dominance, and a flight to the energy infrastructure that will power the next leg of tech growth. Here is your strategic checklist for the next 48 hours. Monitor the gap. Watch if the semiconductor ETF can fill its opening gap or if that break score of 20 leads a multi-day slide. The Microsoft anchor. As long as Microsoft holds its surge levels, the core AI narrative remains structurally sound. The power play. Keep a close eye on the top gainers in the energy sector. If SolarEdge and NVDA follow through volume, the AI power trade is officially the new market leader. The market is not breaking, it is just moving house. Stay disciplined, follow the volume, and I will see you at the next opening bell.